Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. I'm excited to introduce Phil McKintosh to the Trade Talks audience. He's our new Global Head of Economic Research at Nasdaq. Phil, thank you very much for joining me at MarketSite. Tell us about your new role at Nasdaq.
Well, my new role is obviously head of the market research team at Nasdaq, and I'm pretty excited about it. Nasdaq's a kind of unusual exchange because it's always had a focus on studying the markets and market structure, and this team has been the team that's done that. So it's got a great reputation on the street, and I'm kind of honored and pretty excited to join the team, actually.
Well, we're excited to have you on. So improving market structure across global asset classes really is a focus for the industry. Where do you see challenges and opportunities, and when you look at these opportunities, is it a one-size-fits model for the industry?
Well, I would say it's definitely a lot of challenges, and part of the challenges are because there's not a one-size-fits-all market that's going to work. If you look from a high level at what makes markets work really well for investors, I would say two things have happened that you could kind of isolate. One is automation and electronification of markets, and there's been a lot of data and studies that have shown that as markets have got electronified and there's been automated trading, investors have been able to benefit from a lot cheaper trading. The other is exchanges. So if you look around the world, all the asset classes that trade, markets with exchanges tend to have better experiences for investors. And that makes sense because when you think about it, exchanges are an independent common place for people to come together and hopefully for a natural buyer and a natural seller just to meet in the middle. Because they're independent, they're often transparent, they publish prices which people can use for benchmarking, people can see what the market's trading at any point in time, whether or not they're actually trying to buy or sell. So we use it on screens right now to see whether the markets are up and down, whether we're trading or not. So exchanges really do add a lot of transparency and a lot more color to the investor experience.
Let's review capital formation. Why is a healthy IPO pipeline critical to the health of the overall economy?
Well, I think that comes back to how people save for their retirement. And so for most people, the way you save for retirement is a 401k plan or a pension plan. For some people, they've got retail brokerage accounts as well, but almost all of those assets end up investing in the public markets. So part of what we need is to get the companies that people are going to benefit from owning in the public markets in the first place. The other thing about IPOs and why they're important is because they're new companies, so they're often having stronger growth prospects than the companies that are mature in the market. So you want the investors to be able to get into them earlier and benefit more as they grow.
All right, and to wrap it up, what are some concerns that you hear around trading efficiency, and why is it that important to the function of the global markets?
I would say, ironically, it's like a blessing and a curse, but the biggest concern in the market is the automation and the transparency of the markets. It's what we just talked about being a really powerful strength of markets. But because we've put computers into the trading process, we all know computers can think a lot faster than humans, and I think a lot of people are worried that the computers are going to be able to detect what the humans are trying to do and make it much harder for humans to actually trade, especially the humans that are managing those 401k assets. What I think data has actually shown, though, is that the costs are coming down, even for the very large trades. And again, I think the reason for that is because people that are able to hedge and spread risk across different markets are actually, with electronification, able to spread across regions, across asset classes, into futures, into ETFs, electronically, almost instantaneously. And so that ability to benefit from very small dislocations in prices brings a whole lot more liquidity much more quickly to somebody who's trying to actually trade just one stock because they've done a whole lot of work analyzing that stock and they really like the idea of buying it.
All right, well, thank you very much, Phil, for joining us at MarketSite. Thank you for joining me throughout the week. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.